it's better than you think, than you remember.
All right.
It's so good. Yeah.
All right, we're live. We're live. Welcome back
Damn
to
thing is
Token
wrong.
Narratives. Welcome back. Welcome back. Welcome back to Token Narratives. I'm Graham Stone, joined by David Sensel, the news and research gigabrain. How you doing today, David?
Pretty good. Friday here in Asia. How about you?
Come on, man. Where's the hype?
I'm doing good. How about you, brother?
I'm doing great. Um, excited to be heading to Tokyo basically right after this pod. And we're going to be doing a bonus Token Narratives Monday live from WebEx Tokyo. That's going to be exciting. But for
Yeah,
now,
it's gonna be fun. Have a
got a
little
bit of a little
gathering
bit of a
too
dip.
tonight.
Oh, okay, yeah, okay. Let's talk about the markets, right? That's what the people came for, David.
All right.
And the markets aren't doing great. We're down. We're down. It's been a week of down. I think we kind of called it last week with the bearish all-time high. I was fading that all-time
Yeah.
high. It just seems
Yeah.
so
It
tepid,
wasn't impressive.
and yeah, sure enough, we've been bleeding out all week. It just keeps going lower and lower and lower. 112K at the time of recording. We got pretty big ETF outflows. Bitcoin did the last 4 or 5 days. Biggest net outflow day was about $500 million. On the Ethereum front, similar story, but relatively bigger, also around $500 million. Although, of course, Ethereum is by market cap a smaller asset. So, what goes up, what must come down, right, David?
Something like that. I mean, I think I've noticed on the timeline that everybody is, it has been for like the past week. Um, it seems like a lot of people are getting very bearish. Um,
Yeah,
and a lot of people taking profits off here, trying to secure the bag. I've heard more, even in the past couple months. I've heard more rumblings of like, oh, could this be it? Is this the kind of the
yeah,
end of the bull cycle kind of thing?
yeah,
So I think
exactly.
sentiment has for some reason in the past week or so gotten much more negative than than previously, and I can't
Absolutely.
quite put my finger on why. I don't know if you, so you have the same impression.
Exactly the same impression. I think the consensus seems to still be that we've got one more pump left in us. um, this is kind of the summer doldrums sell off, and then this next pump is going to be bigger than the last. And the psychology of it was, I thought what the guys on the 1000X podcast, which was a few days ago, what they said was kind of interesting. Like the psychology of it is people saw this latest pump, right? A lot of them missed it. And then as soon as it starts to pump again, they're going to be like, no, I'm not missing it this time. And so you're going to get a bigger wave of people come into the next pump, and then that'll go higher, right?
Yeah,
So those guys seem convinced that there's one more pump left.
yeah. I mean,
That's what the
I mean
yeah,
that seems like a trader's perspective.
yeah,
But the reason that this would be the last pump would be that the market in general, I think, turns, right. That's, I think the only the only way that this train stops is if you see like a broader market downturn, as in it's kind of outside of crypto as well.
yeah,
Um, and otherwise, these are just dips that should be bought, right? Like if TradFi and the markets in general on an upward trend, then it doesn't seem like there would be any cause for concern. Now, a lot of the people I follow that are not in crypto are kind of saying like, we're yeah, this is really near the top. This is really near the top of this cycle.
for
It's
just
so
equities
hard
in
to
general.
for the markets in general. It's so hard
Yeah,
to know exactly what that means because I feel like a lot of these people have been saying that for like a year or more,
absolutely.
right?
Yeah.
Like, yeah. So
And it's increasingly apparent that asset prices are just a completely different thing from the economy. So if uh, like we go into a recession, that doesn't necessarily mean it's bad for asset prices by any stretch of the imagination.
yeah. Yeah, I mean, so I think this is definitely the if you take away the kind of COVID micro recession thing that hit very briefly. This is like the longest bull market in history, at least in recorded history, right? Like it's like what 15 years or something like that, longer than Bitcoin's been around. So um, we haven't had a proper downturn in crypto, and I've said this probably about a year ago when we first started Token Narratives. So I mean, it is something to be aware of, and that's going to be really an interesting time. Is when crypto gets its first market wide um, downturn, like the kind of business cycle downturn. Um, I, I've been thinking a lot about it this week because some of the data and people that I pay attention to are now kind of banging this drum harder than they have in the past about similar to what those 1000x guys are saying, which is like we're kind of near the top. This is near the top of this bull market. We're not kind of in the middle of it. We're near the kind of blow off top phase.
Yeah, and as we've discussed many times, the last to continue with as always the baseball analogy, the last couple innings of the cycle are the biggest in terms of price appreciation. So you may be near the end in terms of time, but the actual volume, or sorry, the price change is much higher.
Yeah.
Sorry,
Now there's a
it's early.
couple things. Remember, I still uh, I've been thinking about this a lot, and ever since we had that conversation with Andre about the this DAT meta, right? Like and that at that time it was basically only Bitcoin, the asset treasury. In this case, it was just Bitcoin, but now it's kind of everybody. And Andre was saying that he thinks this could go because of the Bitcoin asset treasury meta. This could go well into 2026, just because traditional finance moves a bit slower than crypto, and it would take longer for a lot of these vehicles to spin up. And I thought that was really compelling. I think now though, like you're starting to see cracks in this, especially with in was it the past month where Strategy has come out and said they're not going to be diluting shares unless the mNAV is above 2.5, and it's well below that right now and has been for quite some time. And you're seeing a lot of these treasury vehicles struggle with this kind of mNAV um, question. We don't really know what's going to happen if it goes below and stays below, like one. So I think there's a chance that maybe this meta, this treasury meta is closer to the end than the beginning. And if a lot of these analysts are right, which is um, Strategy and the spot Bitcoin ETFs the spot Bitcoin ETFs were a big driver of the Bitcoin price maybe 18 months ago, and then Strategy took over 12 months ago and has kind of been supporting the price upwards since then. And now that strategy is kind of gassed out, and um, all these kind of imitators or derivatives of that have are look like they're getting close to running their course. You could see um, you could see the price kind of flounder because
Yeah.
there is no new
Yeah.
marginal buyer, right?
Actually, there's an analogy that I heard a few weeks ago that I really have been thinking about ever since. You know those what are it's like a like skydiving, right? But you can go to like a skydiving arena where there's a bunch of fans blowing and you're like inside this like cage. You know
Oh
what I'm talking about?
yeah, yeah, yeah.
What
Those
is that
wind
called?
tunnels, right?
Wind tunnel
Those.
skydiving.
Yeah, yeah, yeah. The vertical
So
wind
the
tunnel things. Yeah,
analogy was that you can think of the markets kind of like that, where the fan is blowing, right? And it just keeps it, as long as that fan is blowing, the like you can be floating there. But as soon as the fan is like the fan represents like the inflows of money coming into the market, right? As soon as that stops blowing, that's you just drop. And
yeah,
so once all of these like uh what do you call them, like consistent flow buyers, like the debt companies, and once they sort of like stop their consistent buying, the result is just going to be that the price just deflates.
yeah. And I would add to that analogy, gravity is just the ambient amount of sellers, right? Like there's just like this at these higher prices, you have an ambient amount of selling. For
Yeah.
example, that super OG whale that sold 80,000 coins, right?
Yeah, legend.
That's quite a lot of gravity.
So just to double clicking, let's double click on the mNAV compression thing. So we got this chart here, which is showing the mNAV again. So mNAV is the multiple of net asset value. So you take the enterprise value of the company and you divide that by the value of the digital assets they're holding, right? And if it's above one, that means that the enterprise value of the company is higher than the value of the underlying digital assets they're holding. If it's below one, it's lower. And you can see that the mNAV has been compressing. So here we have Bitcoin Treasury companies. There's only two on this list here: MSTR and SMLR. That's the Semler Scientific. And we've got this time frame here going back to September 2024. MSTR is the orange one, was as high as 3.64 mNAV. So the company was valued almost more than 3.5 times as much as the Bitcoin they're holding. That has been steadily compressing, and we're currently for MSTR at 1.54, and SMLR is basically trading at one. On the Ethereum side, let me bring up this one. It's a bit messy here, but let's look at the last couple of months. Basically, there several of these are trading significantly below the mNAV, or below one on the mNAV. BMNR is still at a high multiple. BMNR 1.32, but they've all been compressing closer to one and below one.
Yep.
It's kind of as
Now,
predicted.
as predicted, yeah. So the way I'm thinking about this is I had kind of I found Andre's framework very compelling last time, which is that if traditional finance is really getting into this and they take a long time to kind of spin up and you see just mountains of money move in, then this could go well into 2026. Before that, I was thinking that like Q1, Q4 of 2025, Q1 of 2026 would be kind of the end of this cycle. I think that was what I was predicting before. Now it kind of feels like that is back on the table for me. It feels like traditional finance is becoming more crypto like, right? Like very, very short lived kind of scam cycles kind of thing. And so, at least for me, I think what I'm maybe aiming for the end of this might be Q4, Q1, unless you see like a reacceleration of the economy in general, and so that's what I'm really really paying attention to. There's a couple of people on Twitter who are going against the consensus. I think the consensus is that the economy is slowing down. There's a lot of negative data. This is indicating that we're in for some kind of recession or at least pullback, which should drag everything down or slow everything down. There are a couple people who are saying, no, 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 we're going to see a reacceleration of the economy. Some of this data um, is kind of like an echo, and actually, you're going to be surprised when, for example, the Christmas numbers are amazing, and retail in the U.S. just spending a lot of money. Anyway, so that's kind of what I'm looking at right now. I've reset my targets for maybe the end of this year, beginning of next year, with a caveat being if you see data showing that the US consumer is spending lots of money, if data starts to look a lot better, then yeah, you could see kind of a continuation. Um, I don't know. I think the people are being overly cautious right now. I think it's like too fast, right? You see this kind of knee jerk reaction,
Yeah.
often almost reflexive to the price, right?
Well,
Instead of
it's absolutely reflective because reflexive. 2 weeks ago, people were talking about ETH super cycle, ETH to 15K,
yeah,
and we get one little sort of like dip here, and everyone's like, it's over. So
yeah. One thing, can I just talk about one thing that I didn't have on the docket? It's related to the this DAT meta. Um, I don't know if you saw that post by the Giver. I've talked about him before on stream. Guy's awesome. Everybody should be following him. He's at Lazy Villager One, but he goes
yeah,
by the Giver.
yeah.
He had this great kind of framework describing how different DATs work, and he classified like strategy and strategy like um, playbooks as generation zero asset treasuries, kind of like you were talking about, where it's just this constant pressure upwards like a fan, right?
Hmm.
And that kind of linearly lifts the price, and it puts kind of like a slow moving floor on the price upwards. He thought though that these ETH treasury vehicles are a lot more sophisticated, specifically SBET and Tom Lee's vehicle, where they've come out and said that they are not going to have a fan that constantly constantly supporting the price, but they're going to apply this fan pressure at very specific points. Um, 2 points, and the Giver describes it as a cup. As a cup, when the price falls and it hits certain levels, psychological levels, for example, or like support levels, let's say 4,000, right? So when the price falls, they'll let the price fall. They won't buy during that time, but then it reaches these important support levels, and they'll buy then, right? They'll start buying at that point, right? And then that'll provide a floor for the price at certain levels, right? When the price starts to go up again, they'll stop buying, right? They'll stop buying, and they'll be eyeing certain like resistance levels. For example, let's say with Ethereum, it might be all-time highs, 4,800. And as the price reaches 4,800, again, a psychological level, a resistance level where people start to sell again, they'll start buying again, right? To try to push through that price level. And so it's a kind of a more sophisticated strategy. The giver seems to think that it will be more efficient and work better than Strategy's playbook, which is just kind of this kind of almost ETF like passive investing thing where it
Yeah.
just kind of
What you're
mechanically does
describing
that.
there, David, to me sounds like market manipulation.
Um, no, because
I'm not
the
saying
rest of
that
the
like
market.
I'm not saying like illegal market manipulation, but an intentional form of market manipulation that can benefit the price of the asset and therefore the digital asset treasury company.
I mean, it's market manipulation, I guess you could say, in the same way that strategies playbook is market manipulation, right? They
Yeah,
are
but
just
it's a I guess you could say it's a smarter, a more strategic market manipulation strategy, a more
it,
uh,
yeah. It's more sophisticated, but
tactical, yeah, more sophisticated, yeah.
strategy is in other ways strategy. I hate this name, man. Microstrategies,
It's the strategy, bro.
microstrategies, microstrategies strategy is more sophisticated, I would say, on the financial. What's it called? Financial complex that they're making, right? Like
Yeah,
all the
the money glitch.
yeah. That so that also is market manipulation. Like how can we
Yeah,
like get people to buy more of this stuff? And so they have like what, five vehicles.
yeah.
So I mean that's also kind of market manipulation, if you will. Um, anyway,
David,
it'll be
yeah,
interesting to see if this works, right? Because we're seeing
yeah.
like the first testing point of this like a new Gen 2 playbook.
No, that is interesting. But David, I wanted to ask you if any of the points here that Michael Saylor highlights for why MSTR should trade at a premium, if any of these make sense. And he says MSTR trades at a premium to Bitcoin NAV due to one, credit amplification. Not sure what that means. An options advantage, passive flows, and superior institutional access that equity and credit instruments provide compared to commodities. I don't really understand how any of these work, except maybe the passive flows one. So I was listening to that Arthur Hayes interview that you suggested last night, and he noted that his theory is that basically all of these digital asset treasury companies, all these DATs, the game that they're in is to try to get into to get the price their equity to the point that it's big enough that it starts to bring in passive flows, whether that's like it's through some kind of passive flow index, right? The holy grail there is like to be in the, what is it, the top 100 or the top
Yeah,
500
S&P
and yeah.
500.
Once you're in there, you're just getting these like massive passive inflows, and then even all the haters have to buy the company, uh, like people who don't want anything to do with Bitcoin, but they have to buy that company because it's like included in their passive flow, which is a growing proportion of the way people invest, and then therefore that's just going to mean more money can get into the underlying digital asset, right? So that kind of makes sense to me. But the other ones, what is credit amplification?
So credit
Options advantage. Yeah.
amplification, for as far as I would understand it, and I could be wrong, he might be explaining this somewhere. Credit amplification is what we just said, Graham. Is all this other I'm not going to
Yeah.
say crap, but all this stuff that him and his team have
The
created
pyramid.
around. Yes, it is. It's the pyramid, which the study
He
lads were
literally
laughing about
posts the
for the
pyramid
past
as
couple of weeks. Yeah, yeah. By the way,
uh
isn't it awesome, dude? They talked about the pyramid, but we talked about it like
yeah,
almost
you
a
did it
month before.
first. You did it first.
Yeah,
Good work.
it was
Yeah.
awesome. But it again, yeah, credit amplification. It just means that pyramid, right? It's just it means we're really smart and we can engineer awesome financial
Okay.
instruments.
Okay.
Options advantage. This is related to like the options market that is built up around equities, and you know options haven't really um, taken off in crypto, right? You have Deribit, but it's still tiny. In traditional equities, options are the preferred derivative. Um, so the options market is huge there, and yeah, because MSTR is a an equity in these kind of what financial like traditional financial markets, just lots of options around it. The passive flows is what it is, right? Passive investing is a thing. Um, if you're in those indexes, the index mechanically buys everything within the index, so there is no optionality in terms of picking and choosing. And then institutional access is, I think, something we've talked about before, which is, I think Andre mentioned this first, which is just that even though they're spot Bitcoin ETFs, a lot of these institutions, they still can't access this kind of commodity like ETF. They're not
Yeah,
mandated
certain
to do so.
yeah, exactly. Like pod shops or whatever, they're only allowed to invest in equities,
Yeah.
for example.
Um, Now, so that's what all those things mean. Why that
Okay.
means why that means strategy should have a higher mNAV. Um, that still doesn't follow to me, right? Like,
Yeah,
you know what I'm
it's
talking about?
exactly
Like
because those are
those are
reasons
just
people
things that yeah,
could yeah. I mean, the other thing is
well we've
because
took
like if anything it should kind of always be, I mean, there's a on the other side of it, right? There's a reason for it to be below mNAV, which is that the company has costs, right? Like it's whereas if you just
yeah,
like hold the Bitcoin or digital asset yourself, you don't have those costs. So that's a like a
yeah,
on the other side of the ledger. And actually, I just
yeah.
want to bring this up as well because there was a really interesting report from BitMEX where they go. It's called the Treasury Company Advisory Agreements report from BitMEX Research, which they've done a lot of interesting research pieces over the years. And they dug it. They like looked at SEC filings, and they found some really interesting information. Let me just highlight a few points here. It's really about basically the fee, the way these things are structured. A lot of them, the fees are actually like really high. So for BMNR, that's the Tom Lee one. It's
Yeah.
so the advisors have 5-year options to buy 5% of the company for $5.4 per share. What's BMR trading at right now? Like way higher than that, I believe.
Yeah.
It appears as if the advisor also earns an annual 1% fee on the assets. However, this is not entirely clear to us. If that's true, that is a ton of money. Let's look at another one. For SBET,
BMNR is at $48 right now.
so they can buy 5% of the company. The advisors can buy us 5% of the company at 10%, less than 10% of the
Yeah.
price of what it currently is, and dump those shares on the people. So for SBET, the similar situation, the strategic advisor has warrants over 3.4 million shares at various exercise prices for 3 years. And then the asset manager, so that the people who are like holding the underlying assets, they're getting, there's a tiered scheme, but they're getting between 0.25% and 1.25% per year each for holding the assets, with a minimum annual fee of 1.25 million for each manager. So there's a lot of fees that are being extracted and dragging down. There's a lot. So what I'm saying is there's reasons for the mNAV to actually be less than one.
Yeah. Yes. I mean, added to that is just the fact that um, this is kind of like it's a speculative game where retail gets their money taken and smart people, and that money goes to smart people, which means to me is that retail shouldn't be in there, and which would then compress the mNAV, right? Because it's so obvious that it is kind of like an extraction from one group of people buying the stock to another. So I
Yeah.
don't know. It just seems
No, and what, like, it's similar to grayscale. People are comparing it to grayscale, where it traded above premium for a long time, and then finally when the ETFs launched, it crashed below. I've heard also the theory that once these things do get significantly below mNAV, that at that point they are potentially a good investment.
definitely, definitely.
Yeah,
I mean, and this is kind of the marketing though of this thing, right, Graham?
yeah,
Which Jordy Alexander talked about, which is when it's above mNAV, people want to FOMO into it, so they get attention, right? Because wow, look at this thing. It's gone up 10x, and people have made so much money. It can go up another 10x, right? And so
yeah,
you get that kind of like it's kind of the stupid FOMO, because you see it's gone up so much. On the other
yeah,
side, just like you said, when it's below mNAV, it becomes an actual like wow, this is obviously undervalued. You can kind of see it, and then so people want to start buying it, which then probably causes reflexivity, and then up you go. And so either way, um, the insiders, the people who are running it, can can play both sides.
yeah.
They can play both sides of the mNAV thing
Heads I
conceivably.
win, tails you lose.
Exactly. Um, Still though, there's I mean this is the whole. I think this meme which retail wants to get on is like it's kind of like what is it that Arrested Development meme, which is like, why do people keep doing this? Oh, people think that they can do this, but they can never do it. This is they're stupid. Everyone always loses. But I think we can win.
Yeah,
That kind of that meme.
yeah.
Everybody
Create a
knows
fool
the
theory.
scheme. Like heads I win.
Yeah,
Yeah, heads I win, tails you lose. So they're like, but I since I know
yeah,
what the play is, I'm going to be able to outfox it.
yeah.
And so
It like it's a giant game of chicken. Kind of reminds me of the YZY token, which launched just yesterday. But before we get into that, there let's is there anything to talk about with this whole Jackson Hole thing, and the high priest of whatever it is, the money getting up there, and people like, I don't know, like sniffing his butthole and trying to figure out what's gonna happen. Does that actually mean anything? Like, anyway, what does it matter what the Fed does with under their overnight interest rate thing, or the Fed funds rate? Does that actually even matter?
well, we've talked about this before. It used to matter a lot, I would say, for maybe since 2008 to probably at least the people that I follow would say 2020. um, the Fed basically had an outsized effect on the economy, right? They really, really, really determined which way the economy was going. and that spell broke when COVID hit, and the government stepped in and were like, "Hold my beer. Let me show you how to really control an economy," right? And then they just started spending trillions of dollars. And at that point, we entered a new regime, which we're going to be in apparently for the next at least 2-3 decades, similar to like what the great financial crisis did when it entered us into this. You have to pay attention to the Fed, and the Fed was the market. And so, yeah, you basically, I think we're going to see over the next couple decades, but certainly within this decade, kind of the importance of these interest rate decisions become slowly less and less impactful on the market. Um, but there's going to be a transition period, and we're not fully out of the Fed's influence. But I think you can kind of see that it matters a lot less now, because and I think the idea is simply that the spending, or the effect that interest rates have, which are not as direct as when governments spend money. So basically, they're just dwarfed now by other actors, basically governments directly injecting money, um, doing what like Trump has done, but also a lot of other governments are, which are putting on tariffs, which have these just like immediate and long lasting effects on economic productivity, and all this kind of stuff. The Fed, the Fed interest rate thing is a lot. How do you say it? It has its effect is a lot more subtle and
Yeah.
less direct, and so it's just less important because now governments are kind of going to be very much pushing the buttons of the economy.
Yeah.
Yeah.
I mean, I heard a theory recently, earlier this week. I think it was a guy on Bankless, the podcast, and he was saying that it's never, the Fed has never actually been influential. It's all kind of a scam. They're trying to make it seem like
Mm,
they're influential, and that everyone and the market just sort of it's become like a Keynesian beauty contest. Like everyone, no, people are paying attention to the Fed because people are paying attention to the Fed. It kind of seems what his theory
hmm,
was.
interesting.
Everyone knows that's what, like, when interest rates go down, that's supposed to mean bullish assets. So everyone thinks that, so that's why it's bullish at its assets. It's a self-fulfilling prophecy. And then I heard another interesting theory. I'm not sure about this one, but it basically, the guy said, if interest rates go down, that's, or high interest rates are actually good for assets, because it means all the people who have like a ton of treasuries are just getting this like stimmy check basically, and they're pumping that into assets. I don't really buy that one, because if interest rates go down, then the theory is right that if interest rates go down, that means you let people are going to pull their money out of treasuries, the things that are earning passive interest, and because they're earning less, and they're going to have to like deploy that money elsewhere, i.e., into assets.
I mean, so to the second point, when I hear that, it just seems like when you were talking about this, like this thing, and everything you said is true. I agree with it. It just doesn't matter as much as like, is the president of the United States going to put a 50% tariff on China, right? Like that,
Uh,
it's so inconsequential to that kind of stuff. Or like,
yeah,
you have like financial repression, which is probably going to be on the table. Things like the government is going to mandate that banks start to buy treasuries, right?
yeah,
Like that's going to have an immediate, much stronger effect than who cares what the interest rate is. If the government is
yeah,
like, you are now going to have to buy them, or things like what's it called? Companies cannot sell treasuries. It's crazy. crazy stuff
Yeah.
like this is all apparently on the table.
So yeah,
That who cares about the
once
interest
that's in
rate? It
place,
doesn't matter.
exactly. It won't matter, how high Jerome Powell lifts his eyebrow when he says a
Yeah,
certain thing, and that'll be nice. That'll be nice.
yeah. But to the first point, I disagree with that guy because when the government is like really hands off, which it was, right? It didn't want to directly. It didn't want to direct in the U.S. at least. It didn't want to direct markets like this. Um, then that can have a profound impact because it is a market force, and so I think it does matter. Maybe it probably doesn't matter as much as people thought, right? So there is definitely some reflexivity in terms of people think it matters, and so it matters more. But when the government has stepped back, yeah, sure, it'll have an effect like that. But
Yeah.
now we're not we're in a completely different world, so it matters less.
Okay, let's move on to our
However,
last. Oh, what?
well, just
However,
we're talking about Jackson Hole, right? Like, so Jackson Hole
okay,
is coming
Jackson
up,
Hole. Yeah,
and this is not a FOMC meeting, right? Um,
yeah.
this is so the interesting thing that
Symposium.
I
It's a
read on
symposium.
Symposium, yeah, yeah, it's
Yes.
basically a bunch of what's it called, federal employees get to go
Uh-huh.
to a luxury resort in Wyoming,
Yeah.
right?
Yeah.
A super luxury Aspen like resort in Wyoming.
Because the
And
guy back in the day liked fly fishing or something. I think that's what it
is that the
was. That's what
history?
it was.
That's
Yeah.
awesome. I love it.
Exactly.
They get to hang out with Kanye West, right? He's also in Jackson Hole. I think he has a big ranch
Okay.
out there. Yeah. Yeah. No, seriously, yeah. And
Buy
they
some
get to,
Yeezy money.
yeah, yeah, they get to discuss what meme coins they're going to put on the government balance sheet to kind of support the flagging dollar. No, but I think this maybe is more important than a rate decision, right? For example, the September rate decision, because apparently the gossip is that they're going to be laying forth a new monetary policy framework, right? This is the kind of thing that will probably not have an immediate effect, but long term could have, probably will have a much more strong effect than just like, are they going to raise it? Are they going to cut interest rates by 25 basis
Mm,
points, or keep it the same? And so it's something to look out for, and uh, could potentially is maybe the biggest way that the Fed still can have an impact on the market, but it'll be less like a knee jerk kind of thing.
okay. All right. Interesting insight there, David. Let's move on to our last topic for the week. The the launch of YZY. Is it YZ? Yeezy money. So
Yeezy.
let me just bring up the chart here real quick. So yeah, what happened? Kanye West put a video out that seemed like it was someone was pointing at a gun at him and saying, "Hey, uh, tell us about this token. You launched it, okay?" That's what the video looked like.
I
Anyway,
thought it could have been AI. Actually, I thought it
yeah,
could have been AI. I
exactly.
was like, is
Yeah.
this
So here's the
because it was
chart.
so simple?
Yeah, exactly. It pumped within couple hours, 45 minutes or something. It pumped to a $3 billion market cap. Apparently there was it was
Insane,
a single
insane.
sided pool on Meteora. So like uh that just made the price, like any buying just immediately pumped the price. And then of course what goes up must come down, and it did come down.
Graham, what's
uh
the I completely
and
missed
has been
this because I
bleeding
was
out
doing other
ever
things.
since. Yeah, me too. I
What's
completely missed it
the
as well.
what's the FDV? What I mean, sorry, how many tokens are there? What are we talking about here? Does it
Well,
say
we're
what's
talking.
the
Okay, yeah, yeah. So I mean, there's details about it. I've got the. Oh, hold on. Let me
pull up my.
hold a sec. Yeah. Okay. So the. Let me bring up the page. Sorry. There it is. All right. So yeah, it pumped to $3 billion market cap. Some details about like the tokenomics.
Yeah.
1 billion current supply is listed as nearly 1 billion tokens.
Other unlocks
20% of
later.
the tokens. Yeah, here we have details on the vesting. 20% of the tokens are allocated to the public, 10% to liquidity, and 70% to YZY Investments LLC.
Oh my
The
god.
company's
Oh my
portion is
god.
subject to cliff investing schedules, 30% with a 3-month cliff and 24-month vest, 20% with a 6-month cliff and 24-month vest, and 20% with a 12-month cliff. So yeah, the project gets most of it. People knew about this obviously beforehand. It seems that what was it, 93% of the supply was held by the top 10 wallets. Top 4 wallets alone hold 80% of the supply. So looks like a pretty like a resurgence of the like meme coin season. Grift is back, and there was even this wonderful video of let me see if I can find it. Yeah, this guy.
Yeah, it's terrible, man. Jesus, this is awful.
Yeah. Hayden Davis, the guy behind Libra, and who, by the way, looks like he's going to be getting his $50 million back from that.
Seriously.
But yeah, it looks like the government just couldn't pin him down, or like the authorities, the prosecutors. But he's on the phone here with some other crypto meme coin bro, basically saying, "Hey man, I sent you the contract address. Why didn't you get in, bro?" I don't know. And so yeah, the typical
I thought that was
games, it
a.
seems.
I thought that was a troll, though. My guess is that's a troll. I don't think.
Okay, well,
Do
yeah,
you think that was real?
I don't know. I'm naive enough to think that's real. So you got me.
Yeah, my guess is he's just trying to make people pissed off. But again, who knows?
Okay, yeah. So anyway, glad I didn't get in on this one, but also upset that I didn't get in on this one at like immediately after launch when it pumped 6,400% in 10 minutes.
Yeah, but I mean, like that's kind of the who. It's such a most people who got in lost, right? Like it has to have been overwhelming.
Yeah,
If you bought, you lost a lot of you lost most of what you
yeah,
put in. Even if you
absolutely.
bought in the first 10 minutes, let's say you bought in the first 10 minutes, did you sell 6 minutes later, or did you sell, 1 hour
Yeah,
later and just well below your awesome entry? I don't know. I I still can't believe that this kind of thing happens. I
yeah.
don't know. Like, I guess Kanye. My guess would be that Kanye didn't make any money really. Like, it just seems like the people who launched it for him made some money, basically.
Yeah,
Um, but also, though, it means though that the price falling like that so hard, that has to be the team who launched it selling, right? Right, because it pumped so fast. Um, it I don't know why don't people re why don't people see how the Trump coin launched and just do the same strategy as that? because that was such a good strategy. It it worked really, really well. This is just like max extraction,
I
and it's
wonder if
100% from the team.
anyone who isn't like a crypto speculator actually bought into this token. Did any of Kanye West's like retail fans who aren't normally into crypto, were they like, oh yeah, Kanye, I love him, I'm gonna buy this token? Or is this all just like crypto degens being like, oh, Kanye token, that's a buy?
Yeah, PvP, right? This
Yeah,
the crypto fighting crypto. Probably it's going to be like 90% plus
yeah.
crypto people taking money from each other, but it's not the people aren't taking
There
money
would have
from each other. It's the team taking money from crypto people. Oh,
well, and yeah, and a few crypto people, all the crypto people, all the crypto degens thinking that they can beat the system, and
so stupid,
it's
man.
rigged against them.
So stupid.
Yeah,
Yeah, this I hate this kind of stuff. This aspect of the meme coin stuff, and I look at like pump.fun, and it's just so um predatory. And I mean, I guess crypto has always been like this, having cabals or insiders, but it did feel like you could still lose. I was trying to think of an analogy, but like, you have this thing of like a rising tide lifts all boats.
mm-hmm.
Right? Previous cycles, it felt like the rising tide lifted all boats, but maybe the insiders or cabals or mass extractors, they got their boat risen more than the rest, right? But still, all boats rose. And so, like,
Yeah,
I was, because I'm thinking about myself, like, yeah, I know I got extracted from more sophisticated players. I still made some money though,
yeah,
whereas whereas I feel like this cycle, it's definitely not the case. I think I think the rising tide has not lifted all boats. In fact, I think the rising tide has lifted very select people, and then a lot of people have lost money, straight up lost money, net this cycle, which is insane.
yeah,
You're
yeah,
in a bull cycle and you just lose money. Crazy.
yeah.
Um, so I don't like this kind of stuff at all.
I don't like it either.
But
And
maybe this is the future, Graham.
Yeezy launching on Solana. It's bearish Solana, I think.
Yeah, you're probably right. Right? Yeah.
All right.
Yeah.
Last chance for
Sad.
thoughts here, David. Let's wrap it up if you don't have any other thoughts.
Uh, God, I was gonna say something about this Yeezy thing, but I can't recall. Oh, yeah, yeah, yeah. Was it Andre said something in a chat we were in, which I thought was a good point, which is it a scam if everyone knows it's a scam from the beginning? Right? Like at this point, like you
Yeah.
said, assuming that this is all crypto people, right? There's a very tiny sliver of maybe some like naive retail in here, but it's gonna be mostly all crypto. And then
Yeah.
everybody knows that this is a scam. Everyone has to go into this knowing it's a
Yeah.
scam. So is it a scam if everyone knows it's a scam? I mean, seriously, what do you think?
As long as they're it's as long as it's not actually like a rug, right? Like, I mean,
I think this is like a
like,
rug. Look at the chart, dude. They just sold the hell out of it. They rugged
yeah,
they rugged the whole project.
yeah, yeah. It's a scam. It's still a scam.
Why?
Yeah, because or it's just like it's just dirty. Like you're launching this thing, you claiming that you're like, if you look at his page, he's like, it's what does he say? Yeezy money is a concept to put you in control, free from centralized authority. Yeezy is the currency that powers all transactions within Yeezy money. Sorry, I'm sorry, that's terrible.
That's awesome. I love it.
I'm sorry.
Canadian a Canadian take on
Sorry.
urban American English. I love it.
Sorry. That was
Oh, that's
bad.
great. No, it's not. No, it's good. But I get your point.
Yeah, like he's trying to say like it's a real thing, and then you don't sell at the top, like you don't immediately sell your bags, like if
Sell the
that's the
whole
case.
project.
So
I mean, oh,
yeah, so it's a scam.
still a scam. Yeah.
Yeah. All right. Stay away from meme coins. Catch us on Monday. We're going to be live streaming all day from WebEx. Excited for that. We got lots of cool interviews coming up. You're going to be interviewing Arthur Hayes on the weekend. Excited for that one too.
Oh yeah.
All right. See you later today, David. And thanks everyone for joining. Catch you soon. Adios.